Welcome to Financial Market Insights for Traders, the podcast where we break down the complexities of trading into practical and actionable strategies that anyone can use. I'm Sophia, and today's episode is dedicated to beginners in the trading world. Those of you who are eager to start your trading journey but feel overwhelmed by the vast amount of information out there. Let's be honest, trading can be intimidating at first. With countless strategies, technical indicators, and expert opinions floating around, it's easy to get lost in the noise. But here's the good news. Successful trading doesn't have to be complicated. Some of the best traders in the world rely on simple, effective strategies that are easy to understand and implement. So, whether you're just getting started or looking for a simpler way to trade, this episode will guide you through some of the most beginner-friendly trading strategies that can help you navigate the markets with confidence. Let's get started. Understanding the basics of trading. Before we dive into specific strategies, let's go over some fundamental concepts that are essential for every trader. Market orders versus limit orders. A market order executes a trade immediately at the best available price, whereas a limit order sets a specific price at which a trade should be executed. Support and resistance levels. Support is a price level where demand is strong enough to prevent the price from falling further, while resistance is where selling pressure prevents the price from rising further. Trend following, the practice of identifying and trading in the direction of the market's overall movement. Risk management, using stop-loss orders to limit losses and take profit orders to lock in gains. Leverage and margin trading, understanding how leverage allows traders to control a larger position with a smaller amount of capital, while margin trading involves borrowing funds to increase trading power. Fundamental versus technical analysis. Fundamental analysis looks at economic indicators, financial statements, and company news, while technical analysis focuses on historical price data and chart patterns. With these basics in mind, let's explore some trading strategies that are perfect for beginners. 1. Trend following strategy. One of the simplest and most effective strategies for beginners is trend following. This strategy involves identifying an uptrend or downtrend and trading in the same direction. How to implement. Identify the trend using moving averages, e.g., 50-day and 200-day moving averages. Confirm the trend using an additional indicator like the Relative Strength Index, RSI. Enter the trade. Buy when the price is above the moving average, indicating an uptrend, and sell when it's below, indicating a downtrend. Set stop loss and take profit levels. Place a stop loss below recent support for a buy trade, or above resistance for a sell trade. Monitor market sentiment and external factors. While trend following relies on price action, global events, and economic news can influence market trends. Why it works. Capitalizes on strong market momentum. Simple to execute with minimal indicators. Reduces emotional decision-making by following clear signals. Allows traders to ride trends for significant profits. 2. Breakout trading strategy. A breakout strategy involves entering a trade when the price moves beyond a key support or resistance level. Breakouts often lead to strong price movements, making this strategy ideal for beginners. How to implement. Identify strong support and resistance levels using a price chart. Wait for a breakout. Enter the trade when the price breaks through these levels with high trading volume. Set stop-loss orders just below the breakout point to limit risk. Ride the momentum. Stay in the trade as long as the price moves in your favor. Avoid false breakouts by confirming the move with volume indicators like on-balance volume, OBV, or moving average convergence divergence, MACD. Why it works. Takes advantage of large price movements. Works across different time frames, short-term and long-term. Provides clear entry and exit points, making it beginner-friendly. 3. Moving average crossover strategy. The moving average crossover strategy is a great way for beginners to identify trading opportunities without relying on complex indicators. How to implement. Use two moving averages, a short-term moving average, e.g., 10-day, and a long-term moving average, e.g., 50-day. Look for the crossover. When the short-term moving average crosses above the long-term moving average, it signals a buy opportunity. When the short-term moving average crosses below the long-term moving average, it signals a sell opportunity. Enter the trade based on the crossover signal. Set stop loss and take profit levels to manage risk. Combine with RSI or MACD for improved accuracy. Why it works. Provides clear entry and exit points. Eliminates guesswork, making it ideal for beginners. Works well for swing trading and long-term investing. 4. RSI overbought/oversold strategy. The Relative Strength Index RSI measures momentum and identifies when an asset is overbought or oversold, making it an excellent tool for spotting potential reversals. How to implement. Use the RSI indicator. If RSI is above 70, the asset is overbought, potential sell signal. If RSI is below 30, the asset is oversold, potential buy signal. Confirm signals using price action analysis. Enter the trade. Buy when RSI is below 30 and sell when RSI is above 70. Set stop loss and take profit levels based on market conditions. Combine with candlestick patterns like doji or hammer for better accuracy. Why it works. Helps traders identify potential reversals. Simple and effective for short-term and long-term trades. Reduces risk of entering trades at extreme price levels. Final thoughts. Trading doesn't have to be overwhelming. By using these simple and effective strategies, beginners can gain confidence and start their trading journey with a clear plan. The key is to remain disciplined, manage risk effectively, and continuously learn from market movements. If you're looking for a reliable trading platform, check out crystalballmarkets.com, where beginners and experienced traders can access a seamless trading experience. That's it for today's episode. If you found this valuable, subscribe, leave a review, and share this podcast with fellow traders. Until next time, trade smart and stay disciplined.